Hello everybody. Welcome back to the channel where we talk about stuff. And boy howdy, there's a lot to talk about. Don't forget to leave a like on the video. It is a free and easy way to support the channel. We're here, or almost. The topic of discussion as of late has relatively revolved around September, October. If you haven't been here, the topic of discussion has revolved around September, October. This is meant to be the time when we get a bunch of news regarding ETF applications finally being potentially approved. The SEC has signaled and said since around the beginning of the year, something like that, that they would be changing a lot of their policies and make things a lot easier for ETF applications to go through. So this is where the September, October, because I legitimately believe it's like 60 or 70 applications are waiting for that time frame. On top of that, if you've missed it in some capacity way, haven't seen it, sorry if I sound out of it. I'm tired. Life is a lot. It's always like 38 things happening every single day, and I'm just fatigued. What we currently have now as the newest potential narrative has to do with the Fed cutting interest rates. Yes, we have looped back around to the same nonsense all over again. We've been having this news since the beginning of this year. We had news every single month. You must remember, because it was omnipresent, that Jerome Powell was going to cut interest rates. The inflation rate, we were lied to thousands of times. Inflation's only 2.1%. This means the Fed has to lower interest rates. Or we kept on getting this like job news. If you missed that as well, those numbers were also faked. We were told that the amount of jobs that had been created was a brand new high number, and that the jobless loss rate, unemployment numbers were the lowest we've ever seen, or some nonsense like that. They were all completely lies. What we currently have now is that the U.S. market has been more or less pummeled since around February because of all the tariffs. I told you this would happen around February because a lot of people didn't realize that the people who pay the tariffs are the consumers, and now people are buying less. We're kind of in like a 2020-esque kind of moment. A lot more people are saving. Rent is still going up. People are losing their jobs. No one knows exactly what's going on. So therefore, consumers are spending less. I don't know if you watch these like CNBC videos. They constantly have a lot of videos where they're talking about like what consumers are doing and how people are spending their money. And they have these like weird videos. I don't know if you've seen them, where they show people like traveling or like living in other places around the world. And they're like, look at my 7-bedroom apartment. I pay $300 per month. They're really interesting. I watch them. I find them very interesting. So I don't know if you heard the thunder and lightning. So on top of that, yes, the news currently is that according to Jerome Powell's latest speech at Jackson Hole, this was what, 10 days ago or something like that, people believe that in the middle of September they're going to announce a rate cut. If they do, it's probably going to be a lowering of by 1/4 point. If they do 1/2 point, wow, amazing, or something along those lines. Trump and constituents, they want like the literal, I think the interest rate is like 6, 7, 8% or something. It's kind of high. I think they want it lowered to like 1 or 2%. We're not going to get that kind of a cut all in one go. Maybe sometime next spring. Fantastic. But as of now, this is like really like running the markets. If you haven't been seeing, that was the generalized push up that we saw just a couple of days ago. It was, sorry if I'm screaming. It was this idea that because of the rate cut, that things in basically all markets are going to do exceptionally well. The issue once again is similar to 2020 and more or less 2021. I remember how the stock market was doing like exceptionally well and people were like, what the fudge is going on? That was because of quantitative easing, a huge amount of money printing, if you will. And basically like, I I'm at home, let me buy something. Stocks were going up. So Amazon was doing really well. Apple was doing well. Basically all the companies that if you're sitting at home doing nothing, you would basically go onto your computer and buy stuff. And then that company's stock kept on ticking up because everyone's at home just basically buying stuff. So what we have now is a bunch of AI stocks going up. For those of you who, and I'm going to be as nice as humanly possible. For those of you who are generally unaware, I've noticed that there's a heavy disconnect in the cryptocurrency space between AI and actual logic. I'll tell you why. The general person, the general population, 95% of humans on the planet don't actually use AI and they don't want AI. AI could have many practical applications for healthcare, medical things, for like making life easier. How do we design cities better to make them more walkable or livable or whatever? However, people are using it and they're like falling in love with AI and they're taking their AI for walks and they're asking it like, hey, I have a potato at home. How do I make dinner? So a lot of what we're seeing right now, and I'm pretty sure many of you have read it as well, the heads of NVIDIA and people from Microsoft and other places are basically announcing that AI appears to be one gigantic bubble. Surprise, right? The thing that no one was really asking for. A lot of people within crypto got very hyped. There's multiple D's at the end. Because they were told last year that a lot of these new cryptocurrencies would have AI attached to them. And I was like, that doesn't do anything. We don't have general AI. We have generative AI. You can throw a bunch of stuff inside of it and it'll give you an answer that you want to hear. But we don't have like Terminator walking around kind of AI, but we maybe in like 20 years, who cares? The point of the matter is that the stock market is mainly being propped up right now by AI stocks and AI companies and these kind of things, because only the rich people, the very wealthy people who are pushing these things onto society, believe that they're going to be big because they keep telling themselves that they're going to be big, and they're in this echo chamber with them and all of their friends talking about how amazing AI is going to be without actually creating applications for the public. They're doing it for themselves. So, ow, my leg. So, a lot of these AI stocks in the next half a year, potentially a year, are probably going to fall down because a lot of people aren't using them. A lot of people aren't actually using AI. So the answer then would be the answer, because we're in a terrible economy. We're in a terrible system. The system doesn't make any sense because it's self-perpetuating. You have to create in order to eat, and you have to eat in order to create more money constantly in this flow. And the only people who are constantly winning are the people you hear about on the news who are worth $289 bajillion over and over and over. So the answer? Print more money. Lower the interest rate, and this is what's constantly like currently going on right now. Don't know, like I said. I think sometimes people get news, but they don't get all the news. Or people hear that something is happening or might be taking place, but you don't really understand why. Yes, so the narrative would then be, things are bad, print more money. Print more money, prices go up. Prices go up, crypto go up. Crypto go up, people make money. People make money, more money in market, prices go up, and it kind of continues over and over and over. Also with this narrative that we've been hearing for quite a few months now, that market cycles might be over, which is also going to be a very fascinating thing in the next couple of months. A number of analysts are saying, because of the money that's been pushed into this market, that basically it's more money than we've ever seen before. And that's going to cause any dips in the market, they will be limited. So saith the analyzers. We have a lot happening at the exact same time. And I've said that phrase 38,000 times before. It's because it's true. It's because this market's insane. It's because the world is going absolutely cuckoo bananas right now. Money is also bad. Yeah, I don't know if you've been seeing other economies. They're also cutting their interest rates. It's not really working. Their equivalent to the feds are trying to figure out what to do. And you can't have interest rates at zero or negative because that'll really destroy stuff. We're getting a lot of de-dollarization talk still happening because it is still happening. A lot of countries are kind of banding together and being like, we can just trade amongst ourselves. We can just use Bitcoin instead. How this isn't causing more of a dramatic I don't know, feeling from people is very weird to me. I mean, like, you can see that the world is changing, like, constantly in front of us, but very few people seem to actually be paying attention to it. So, yes, my friends, we are currently at the point where in the next legitimately 7 to 8 weeks, we should be hearing about if we have 60 to 70 brand new cryptocurrency ETFs. We're 2.5 weeks away from hearing if Jerome Powell is finally going to lower interest rates. We're also, and this one's a bit further away, but is the market broken? Are cycles no more? Are we going to have to find a new way to figure out what's happening within this space? Yeah, so, I mean, at least 8 weeks isn't that far away. I would prefer it to be a little bit sooner, but yeah, buddy boy, we have a lot happening in the next, like, even the next couple of days. I'm sure you've seen the market. It's all over the place. I believe, from what I've read, this mainly had to do with Ethereum hitting a brand new all-time high. It was like $16 above the last number, and then it was kind of like, there's always a pullback, always, after we hit a brand new all-time high of something. And now anticipation is once again knocking on the door for a $7,500 Ether, an $8,000 Ether, and that's only based on the accumulation that we've been seeing, which would then mean if we actually do see one, and, you know, heaven help us, if we see 2 interest rate cuts, that would then push us to the $15,000 Ether, and would also make a dramatically amazing Christmas for everyone, because altcoins would then do the normal 10, 20, 30x that many people have been waiting for. Yeah, it's a lot. Always, 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 always. I mean, at least the space is always exciting. I guess that's a silver lining in some sort of way, but it is quite stressful. It is quite, I was chatting with a friend like a day or two ago, and he was like, yeah, I've stepped away a bit, because it is a lot. It is a lot, coupled with everything else that's also going on in the monetary world. But yeah, I think that's going to do it for this video. I hope you're all doing well. I say it all the time. I mean it. There's a lot happening. Please take care of yourself. Please drink water. Please go on walks. Please read a comic book. I don't know. Do something that makes you happy. Hope you've all enjoyed. Hope you all are having a great day, morning, afternoon, evening, wherever you are, wherever you might be. I do hope it's absolutely fantastic. Thank you all once again for watching, listening, liking, commenting, and supporting. And I will most certainly be talking to you all soon. See you.